That's exactly what we got, a contraction of -0.2%, and we were looking for that. As you said, we're looking for a smaller contraction because we knew that construction spending and retail sales were going to come in a little bit better. Now, personal consumption is interesting because we were looking for a revision there up to 1.9% from 1.8%. We actually got a better revision. 2.1% was the personal consumption revision there for the first quarter. Markets really trading today mostly on Greece and Greek news. These numbers were pretty much telegraphed, so markets are not paying a whole lot of attention to them. But you can see the 10-year Treasury yield moving behind me, and futures are not really picking up too much after that data.
Yeah, the GDP net revision there clearly in line with expectations. Matt, Vonnie, one thing.
And it's not as much of a bummer, right? Because we're already looking ahead. Obviously, the first quarter was like 100 years ago. So the second quarter is expected to grow 2.5%, and that kind of takes the sting out of it.
How about third quarter 2014? The economy grew 5%.
So it was a lot better then, and we've seen a real slowdown.
And our Bloomberg economists pointing out that it's actually very different this year as well because of currency headwinds and energy headwinds, and they'll last probably throughout the third quarter
and
as well.
Don't forget the sharing economy, which makes it much more difficult, as Josh Wright pointed out in the story.